All right, let's jump right in. Welcome to this explainer, where we take those totally baffling financial moments and break them down so you can actually understand the mechanics behind them. Today, we've got a truly fascinating look into why banks deny personal loans. And we're going to unpack this by walking through a real-world, highly dramatic case study. We are literally going to dissect the anatomy of a bank sale step by step, just to show you exactly how a simple request for a loan can spiral into a very, very expensive lesson.
So I want you to think about this for a second. How easy is it to borrow $30,000? Seriously, ask yourself, if you just strolled into a local bank branch today and asked for 30 grand, what do you think would happen? Our case study today focuses on a customer who thinks scoring a massive loan is literally as easy as walking up to the counter and asking nicely.
Enter Marco. Marco walks right up to a bank teller and says, "One of my friends recommended me to come to this bank. He said you gave him $20,000. Well, I want $30,000 now." I mean, you gotta love the sheer naive confidence there, right? Marco is treating a massive financial institution like it's some sort of referral program for free cash. He expects to get a payout simply because his buddy got one. And honestly, this sets up the perfect stage for what unfolds next.
Section 1. The naive loan request. Right off the bat, Marco's baseline financial situation becomes crystal clear. He just openly admits, "It's the first time I come to this bank. I have never asked for a loan before." And there it is, his absolute first major mistake. He is walking into this bank totally blind. He's got zero credit history, no prior relationship with the bank at all. He doesn't even have a basic checking account with them yet. The guy is a complete blank slate, and he's asking for $30,000.
Section 2. The distraction technique. Now, instead of addressing the elephant in the room, the $30,000, Diego, our bank teller, completely pivots. He looks at Marco and says, "You can participate for $1 million. You can be one of our lucky winners." It's a brilliant, though totally manipulative, use of a lottery fantasy. See, Diego knows instantly he can't give Marco a loan, but he absolutely can sell him an account. And he does it by distracting him with the shiny, glittering promise of winning $1 million. He completely derails Marco's original goal. And this is where we see the trap snap shut. It's a classic bait and switch. Diego promises Marco is going to earn all this interest, but the harsh reality? Marco has to lock up a $1,000 minimum balance. Diego dangles the $1 million raffle. But if Marco's balance ever drops below that $1,000, boom, he gets hit with a $20 monthly maintenance fee. Diego talks up free transfers, but completely glosses over the fine print that transferring money to other banks comes with a $4 fee every single time. Marco thinks he's buying a fantasy, but really, he's just signing up for a bunch of hidden fees.
And speaking of that $4, the entire trap hinges on it. When Marco tries to pump the brakes and asks if he can maybe deposit his money tomorrow or next week, Diego hits him with a brutal high-pressure tactic. He tells Marco that if he doesn't transfer his $1,000 of savings right this second, he'll be slapped with a $4 penalty instantly. Panicking under the pressure, Marco makes the transfer. Just like that, the banker has secured the deposit.
Section 3. Selling fear and fantasy.
You really have to appreciate how aggressive this upsell sequence is. Step 1. Diego asks for Marco's ID, pretending he's going to check his credit history. Step 2. He uses that exact opening to shove a fee-heavy checking account down Marco's throat. Step 3. Now that the account is open, Diego pushes a $10 a month anti-theft insurance policy to quote-unquote protect it. And if that wasn't enough, step 4, he actually tries to lock Marco into a life insurance policy with a 20-year commitment. I mean, think about how wildly off-topic we are right now. We started this conversation talking about a personal loan, and suddenly we are negotiating a 2-decade life insurance policy. It's wild.
So, how on earth does he convince Marco to buy anti-theft insurance? He hits him with this line. "What if you earn more money later? Or imagine if you win the $1 million. You will need to have your money safe, believe me." Diego is expertly playing both sides here. He's mixing hypothetical wealth from that lottery ticket with the primal fear of theft to successfully sell Marco a $10 a month policy he never even wanted. And the craziest part? Marco agrees, because in his head, it makes total sense to protect his imaginary millions.
Which brings us to Section 4, the ultimate loan denial.
Okay, here comes the ultimate bait and switch. After literally draining Marco's deposits and locking him into these monthly fee commitments, Diego finally says, "I regret to tell you that for now, you're not eligible for a personal loan." The bank just flatly rejects the loan request. No hesitation.
It's honestly a tragic misunderstanding of how banking actually works. Marco's expectation was a straight-up transaction. Look, I opened your checking account, I bought your silly insurance, so now you hand over the $30,000. But the bank's reality is just cold, hard math. You have absolutely no credit history. Therefore, your loan is firmly denied. Section 5. Why banks say no.
Look, at the end of the day, it all boils down to credit history. While most of us know this is simply a track record of repaying debts over time, Marco completely failed to grasp this concept. A credit history was the one crucial thing he lacked, and unfortunately for him, it was literally the only thing the bank actually cared about for his loan request.
So let's break down exactly why Marco got denied. First, he had absolutely no prior loan history. Second, he'd never even held a basic credit card. Third, his checking account was, maybe 10 minutes old. He fundamentally misunderstood what a bank requires for eligibility, and perhaps his biggest mistake, he confused handing over a cash deposit with actual creditworthiness. Buying side products like insurance or opening a checking account does not magically erase a blank credit profile. Banks want proof you can repay debts over time. They don't just care about your willingness to pay their hidden fees.
Diego finally reveals the brutal truth to Marco at the very end. It's a strict timeline. Day one isn't payday, it's just the starting line, where you deposit your money and maybe, just maybe, get approved for a starter credit card. Marco is definitely not walking out with 30 grand today. He has to maintain perfect credit behavior for 6 solid months, and only after a full year can he come crawling back just to be reevaluated for a loan. Building the kind of trust a bank needs to hand over $30,000 takes a lot of time.
So I want to leave you with this to chew on. The next time you sit down with a banker, ask yourself, are you actually building a solid credit history, or are you just getting talked into buying bank products you absolutely do not need? Seriously, don't let the shiny promise of $1 million raffle distract you from your real financial goals. You've got to understand the rules of the game before you sit down at the desk. Thank you so much for hanging out with me for this explainer, and I really hope you keep these lessons in your back pocket before your next loan application. Catch you next time.